There's a couple different ways to use them. A lot of traders use them to try and trade in between, buy when it hits the lower band, sell when it hits the higher band. That's one way to use them. Another way
Welcome back, traders and investors. We have Kenny Glick on the line, and he is owner and creator of HitTheBid.com. He started his life as a professional stand-up comic, was lured into the markets by the boiler room operation, and is a big fan of the markets. Kenny, how you doing today?
Oh, great, man. Thanks for having me on. Just, you have to speak up. I'm wearing a towel, okay?
You're wearing a towel on your...
Correct.
Okay. Do you want to explain that?
No, we'll just let that one go. How's it going this morning?
Well, it's a good thing we're not on video yet. We'll have to be next time we have you on video. Things are going good, and before we got onto the show, you and I were just talking about the correction, and you think the correction's over?
Well, I guess if the funny thing about this correction is, I don't know if you guys watch my videos. I do a lot of silly videos on YouTube, talking about my general thoughts of the market. I know you guys were talking about Alibaba this morning, and there was a lot of guys talking about how Alibaba could signify the market the top. Now, people talk about the top. They should say temporary top, because I believe the market is controlled by the government now, and we will be going up in perpetuity, at least for the next 18 to 24 months, but we'll get to that in a second. But as far as Alibaba, on September 19th, I advised my clients and got my family out of the stock market, and it was a fantastic call. We sold the Qs over 100.
Wow.
Got out of our Alcoa and our AIG and our Alibaba, and right across the board, we sold everything. And, we waited. We were hoping that this market would sell off, and then obviously we got that monster sell-off. Now, the thing about timing this market is, when do you get back in? It's great that you make this amazing call, and now we're sitting in cash. When do we start buying? Well, we looked at Netflix getting destroyed as maybe a possible bottom. And I don't know if you guys, we spoke about VWAP at an earlier day.
Uh-huh.
I could not believe what I was looking at on the chart. I have I use Thinkorswim, and I have my VWAP where it could give me data from any time period that I choose. So I put a 360-day VWAP chart on the QQQ, and the computer said, buy some Qs if you get down to 90.08. And there I was at 4:45 in the morning like a lunatic trading, and the Qs were at $90.18. So I said, hey, look, I'm going to buy these things back at any time. I'm going to give them a shot here, considering they've come off 10%. And what happened is just absolutely insane. I don't know if that word describes what we just saw in this market over the last 10 or so days. I mean, what do you make of this? I'm curious to hear other people's opinions.
No, I'm totally flat. I mean, it had the reaction. It was based on fear. It was fear. People were bailing out of the market. The Ebola virus, something that it was an unknown, and people were reacting to the unknown. And it just fear and greed took the market down. Now, the rebound. I think what happened on the rebound is a lot of people not only got out of their investments, some of the big boys got short, and then you just had that, that quick pop back up, like the 50% retracement, and people were just saying, okay, this is the pop. We've had a big break. We're going back down. And it didn't. And you have fund managers and hedge fund managers that were getting lit up before this happened, being so underinvested. When they didn't get a second chance to get back in, they had to buy into strength. So that's my take on it. But do you trade much during the pre-market or the after hours? Do you feel that there's just less competition at those times, or are you just a person that doesn't sleep at night?
Well, I only traded that morning because the QQQ, which is really what I really focus on. I don't really watch the SPYs or the Dow Jones as much. I'm a big tech guy.
Okay.
But when they got down to those levels, plus, during that week, I really wasn't sleeping well because, I was really looking forward to, getting involved on the long side. That I was so happy that I was in cash, and I had a decent amount of puts on the QQQ at 97.50, and considering the last 5 years, every time you bought puts on the Qs, you were a loser. So when I made 200% on my money, I was ecstatic. I'm throwing parties, and next thing you know, I left 5 points on the table on a trade that could have changed, some of my guys' lives. So after missing a big chunk on the downside, maybe this is revenge trading, but I was looking to buy because I was sitting flush with cash. And that was the only time I was up at 4:45 in the morning looking to buy stocks. Generally, I've taken intraday trading and I put it on a shelf right now.
Yep.
Because I think this market is perfect. Okay, we got the 10% correction that everybody was hankering for. Everybody was calling for it. And what I find amazing is that how many people started saying this time is different. I mean, right across the board, the CNBCs, the blogs, everybody. This market is different this time. We are broken. We're not going to have the V recovery. We're not going to have the buy on dippers win this time. We're not. And again, I'm not going to say that I loaded up at the lows there, and I'm not going to say I added to it. I'm still in the same position that I was in from that day. I have not added to this because I was waiting for some consolidation before our next move up, and we have not got it. So now I'm led to believe that we got the 10% correction. Again, I think Ebola might have been a coincidence because this market was ready. We were ready to go down 10%. We got the perfect 10%. I mean, if you look at that QQQ chart, that is a thing of beauty. It went from $100.50 to $90.08. It is a perfect 10% correction. We got the double bottom, and then we got the breakout over 91.63 for me was a very significant price, and then 93.35. So right now, I keep raising stops on my position every day. I am just amazed that we still continue to go up. So, like I said, I've been taking this intraday trading and putting it on a shelf, and I'm just going to enjoy the market for all of its government intervention glory at this point.
GIG, government intervention glory. First going to the charts on the Qs here. You do have a couple tops here. High yesterday, 98.87, 98.69. That coincides with a couple tops that you had back really before things got started in the upper 98s. Are you inclined to just move your stops up? Or do you have is your target 150? I mean, how do you play it?
Well, long-term perspective, and I know this might sound crazy, I think the Qs are going to 143 over the next 18 months. Let's just throw that one out there. Okay. But if you are a short-term buys trader, which I know a lot of you guys are, we're right at the moment, we are butting up to some resistance. But I'm not going to flinch until I see a true reversal. What that means is the market's gapping up today. I need this market to roll over, go red, attempt to rally, and fail. That's what a true reversal will look like. And that price will be at around, I'm looking at the Qs at around 98.75. Show me 98.75, and if that starts breaking and I have another level at 98.55, those are where I have two stops on some short-term QQQ positions. And other than that, I mean, I'm still loving U.S. Steel, Big X. I know they have earnings tonight. Which could change everything. I'm not a big fan of gambling on earnings. But here's a stock that I was pounding the table from 27, 35, 40. This thing looks like it's going to 50. Next thing you know, I'm able to buy it back at 31.20. Are you crazy? So I have to think there's somewhere in the middle here. So I'm thinking the stock gets back into the 40s and starts its slow climb back to $50. big fan of U.S. Steel.
Okay.
And I know you guys, but you guys were talking about Alibaba. You know, considering Alibaba signified the top, I was waiting for Alibaba to get down to 82, 83, and never really got there. I think maybe close to it. But Alibaba seems to be controlling this market. You know, it showed us the top, and when it bottomed, it showed us the bottom. And the one thing about Alibaba on the way down, what was really interesting about Alibaba is that it wasn't getting punished. It was very controlled. There was always a bid on Alibaba. It just seemed like, okay, yeah, we'll sell you off a little bit because the market's going down, but oh baby, when we start to recover, we're going right back to all-time highs. And look where it is today.
Yeah, no,
Amazing.
that's interesting too. And if you had your order out at $100, triple digits, Alibaba here, pre-market trading, the high was 10015. Since the normal session, regular session started, the highs 99.87. So haven't hit 100 in the pre-market, but 99.87 is a new all-time high. So Kenny, you sound like you're pretty technical. Are you a bar chart, candlestick, moving averages, Bollinger Bands? What are your go-to and technical analysis techniques?
I use candlesticks and volume weighted average price. I have a young fella. He's half my age, who saw some of my videos on YouTube, and he was in my chat room quite often. And I had my own little way of, just using high lows of candlesticks over a 250-day period to give me an idea where stocks were going to go. And he introduced me to volume weighted average price. And he said, can I do you a favor? Let me just put in a couple of codes into your charts and show you how what you're doing in this methodical way, VWAP can do for you in the click of a button. And I have been a champion of volume weighted average price for the last 2.5, 3 years. And it is the greatest thing. I don't use anything else. I don't know about Bollinger Bands or stochastics or dark cloud covers or shooting stars or dojis. I know nothing of that anymore. I know volume weighted average price because this is the holy grail of trading. And I'm not exaggerating or trying to be funny here. He set up some deviation bands and volume weighted average price, and my charts are able to give me on a 1 minute, a 5 minute, and I often use 250 day and 360 days just to give me an overview of what I'm looking at. And my God, it is phenomenal. I mean, it picked the low on the Qs by 8 cents. I mean, it really couldn't have got much better than that. Again, courage and sentiment and just the idea of wanting to take profits has gotten away with my trade. I mean, hey, if I was still long as many Qs that I bought those first 2 days, I probably would be on an island somewhere with my family, homeschooling my kids with nothing to worry about right now.
Well, the only thing,
the
only thing you would need to teach them is the VWAP, right? I mean, what else would you need if you know?
Right.
Yeah,
exactly. I'm trying to teach my son that. He's like, what are all these lines? I'm like, let me show you what's going to happen here. As a matter of fact, U.S. Steel just broke back down underneath my 1 minute here. Oh, it's struggling.
Come on, Kenny, you can't look at a 1 minute. You're talking about the eternal bull market. I don't want you looking at it in a 1 minute chart. Get rid of that.
That's true. Although I keep it on the screen just to see
for some action
in case there's a reversal.
If
I am gonna trade intraday, it's generally on a 1 minute to 5 minute VWAP breakdown, and if that coincides with a reversal, then I'm putting a trade on, which saves me a lot of money on Alcoa, because Alcoa by far is my favorite stock on the planet right now, and I've been long for quite a while. Either I had a large position or not so large, and there was a day where, it was actually on earnings day where they reported great earnings, everything was super, and the stock first it broke the 1 minute VWAP, and I was a little concerned, and then it reversed. So those are the signs to sell, and I didn't hesitate. I dumped my entire position that day around 1630, 1625, and that started the entire collapse of the entire market. And then VWAP told me to pick up some Alcoa at 1385.
Nice.
And that's
nice.
where I'm long. That's where I'm long the Alcoa. And I'm hoping this thing finally does break out.
Yeah, look at that.
17
Yeah,
change.
yeah, look at that. You have 1, 2, 3, 4, 5 highs between 1647 and 1659, hitting that 59, hitting it today. So definitely some formidable resistance there. Well, VWAP is pretty self-explanatory, right? I mean, volume weighted average price, correct? Why?
Right.
Why do you think it's such a good indicator?
Oh wait, I have to refer to my master. He tells me that it signifies you're changing lanes. You're driving in a car and you're in the slow lane, and as you approach the VWAP, it's like you're going into the fast lane and you have to accelerate to keep up with the rest of the traffic. He also tells me that VWAP is the way the algorithms talk to each other, and considering most of our trading is done on the gray boxes, the green boxes, the black boxes, and the silver boxes, and all those boxes, this is the way they talk. So stock purchases and sells are triggered around the VWAP. That is why you get these significant moves when they break. You know, he likes to use the 1 minute and the 5 minute for your intraday trading. But then more significantly, these multi-day VWAPs, as I've been instructed, are very significant for your swing trading and your long-term trading. And to really dumb it down, volume signifies importance. So you have a moving average, but your stock could be jumping around from 15 to 16 to 17 to back to 15. But it really is significant to know that at 1625, so much more volume came into that stock other than at 1550. So it really makes it more significant to know where the main volume came in, signifying institution buying, signifying real buying. And that's why I believe it works so well. And I will never stray from the path again. I'm a true believer.
Okay. Also, I know I have some buddies that trade on some institutional desks, and that's pretty much what when they get their orders for the day. If they just if they're buying, get me the VWAP for the day. If they're selling, get me the VWAP for the day. So and then also you talked about the different algorithms that are tuned in. They are trying to get the VWAP. So that's an interesting note there. Anything? Are you doing anything on the Facebook ahead of earnings? Twitter, big disappointment this morning. Got down to 41.26 in pre-market trading. Couldn't quite get there in the regular session. Facebook making an all-time high a few days back at 80.82. Now they're high at 80.80. Any feeling on Facebook going in the earnings?
Well, again, it's hard to gamble on earnings.
Correct.
But the way Facebook is moving, you have to just assume. And I'm doing this 25 years. Somebody told me once, stocks that go to 80 don't stay at 80; they go to 100. And when they hit 100, they go to 120. So I'm going to think over the next 12 months, we're going to see Facebook at 100, and then we're going to see it at 120, regardless if it sells off 5 points tonight or pops 5 points tonight. I believe the easy money in Facebook is over. I mean, the easy money obviously was a year ago or however long ago when they were calling this the worst IPO ever, and it seems like it's a distant memory right now. But the kids are supposedly leaving Facebook, but you know what? How could you fight this company that's becoming the next Google? I would not sell it. But I wouldn't be buying too much of it right here. Wait for this earnings report. And as far as Twitter, again, this is one of those companies where I don't know how they make money. And, I like Twitter because I'm a Jets fan. And when the Jets get pounded, I commiserate with the rest of the world by tweeting my displeasure of how awful the Jets are. So I've come to love Twitter to quench my thirst of just rage and just to post things on there. But again, I'm not paying to do that, so I don't get Twitter. I mean, I think they're going to survive because it's a lot of fun to tweet things and get your point across to your followers, and I don't understand. Right now, what I'm liking are Israeli stocks. Okay, I'll give you 3 stocks that I've been.
Okay.
Obviously,
Sounds good.
You guys know about Mobileye. I've been having some luck with the Israeli stocks, so I've been sticking with Mobileye, MBLY.
Okay.
And you guys all know about what that is.
Yep.
You guys know about the CyberArk. Cyber, pretty popular.
Okay.
But I'm going to give you a little secret one, and
Great.
maybe I'll let it out of the bag right now. It's called Supercom. Not that many people know about this company. They're mobile payments,
Symbol.
secure connections.
Symbol.
They do touch upon a lot of different things, and it's a very undiscovered company. It's a thin stock, so you'll have some.
What's the symbol on it, Kenny?
This would be SPCB.
SPCB. Okay. Let's see if.
Yeah, and like you said, coming from the world of the boiler rooms, I remember they used to have the funniest names for companies when we would pitch them. They'd always super something, or So when I read about this company, I was like, this can't be a real company. Supercom, that's the name of the company. And I was very skeptical at first, but it was recommended to me from a hedge fund guy, and I was very surprised he was buying a $6 stock. I got involved at $9, and every time it goes to $9, I buy a little bit more for my kids, and so far so good. I think they're reporting earnings in a couple of maybe a week or so.
Okay.
Very interesting. Again, if you guys are out there and you're looking to buy it, it's definitely a buy on dip situation. Sadly, there's no option, so you can't hedge yourself.
Okay.
This is one to keep your eye on, considering the way these internet security stocks have been going. And my final one, I think I talked about this on the last show, is the FireEye. It's not going away. It keeps making comebacks, and now we're finally breaking out of that low 30 area, and it looks like we get through 33. This thing could pop another 4 points from here short term, like in the FireEye, and there's been some huge call buying on the FireEye. So again, I like this. I like the internet security, and I like my Israeli stocks, and FireEye looks pretty good, and U.S. Steel. Let's all hope they have something positive to say today and get this bad boy back into the 40s. And again, long live the government intervention of the stock market. As much as everybody seems to have fault with it and how we're printing money and QE was a bad thing, why not have the market go up 90% of the time? I got no problem with that.
Okay. All right. We've had Kenny Glick on the line, and he is the founder of HitTheBid.com, owner and creator. Throwing a little bit of comedy in here with his outlook on the market. Kenny, we appreciate it. We'll keep an eye on the stocks that you mentioned, and we really appreciate you being so forthcoming with your calls. And have a good trading day. Good luck on the U.S. Steel earnings.
Yeah, man. Thanks for having me on. Good luck to you guys. Good luck to you guys out there. And long and strong. Let's see this market hit 20,000 in the next 18 months.
Okay.
Good luck to everybody.
All right. Thanks
a lot.